Hello, 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 everybody. As I promised, today's show is how are you going to get rich in 2024 in real estate? And I brought on some of the leading authorities from around the country. Now, I have the privilege of working, this is what I would call my team. And I've got the privilege of working with all four of these amazing individuals. So I'm going to introduce them, tell you what I know about them, and then you're going to understand why what they bring today is so important. I've got the comments turned on. So we're going to do questions. If you all have questions, put your questions in the comments. But what we're going to talk about is what is happening in the real estate market. God, it's so confusing, y'all. You know, you turn on the news and you hear one thing, and we all know the news lies, and we inside the industry. So I've literally got agents here from coast to coast. So I'm Lisa Copeland. I'm your host. I'm in the top 1% of as is everybody on this call today, and at eXp Realty, we're the #1 brokerage in the world when it comes to sales. So that's pretty impressive. We have sold more real estate, more properties than any other brokerage. So booyah on everybody else out there right now. So that being said, I'll start kind of in my row. I've got my good friend and what I would call business partner, Cindy Yates, and she is the vice president of sales for Capital Title. And why do I have her on there? Because Capital Title is the largest title company in Texas, and I use them exclusively. I have a listing 200 miles from me right now. And I called my gal at Capital Title, Sandy, and I said, are you going to handle it? She's like, I absolutely will handle it. I will drive to Denton and I will close that deal. I love that about you guys. So Cindy's really got her pulse on Texas, right? And Texas is probably the leading market in the country right now. And I'm going to share with you guys some stats in a little bit. And I've got Robert, I always say your last name wrong.
McConaghy, like the actor.
That's what I thought. Okay.
Easiest way to remember.
I'm actually meeting Robert Friday night in San Luis Obispo, California. He and his wife are joining us for dinner. He is a top agent on my team out there in San Luis. He just put under contract a $2.5 million vineyard. And he is the hardest working top agent out there. But that California market, you know, a lot of people think California is dead. You know, it's crazy out there, but it's not. California is booming. And Robert, I want to talk about that. I've got Angie Yates, a 25, 30-year realtor on my team, top agent out of Dallas, Texas. Absolutely crushing it. She handles the Metroplex. Dallas is a very important market. And then I would be remiss if I didn't cover the other side of the country, the other great state of Florida, Miami, Florida, that whole area, Claudienne Hibbert-Smith. Claudienne is numero uno on the Elena Cardone team when it just comes to everything, whether it's production, whether it's bringing on agents to build our organization. She's an absolute, and I say this with love, beast when it comes to real estate. And so anyways, I wanted to bring everybody together because I get so many questions. And I feel like when I come on so many times, y'all, that I'm always talking about Texas. But I have so many Texas clients that are in Central Texas and they're buying in Dallas because Dallas is one of the top markets in the country. They want beachfront property in California, and God knows everybody's moving to Florida. I say that if they don't live in Texas, they're going to live in Florida. So all of that being said, I'm going to kind of go around the room here, and I'm going to have each of you kind of give about a 2-minute about what's going on in your market. And Cindy, I'm going to start with you because you really have the pulse on Texas. Being the largest independent title company in Texas, you're handling all of these contracts. What have you seen happen in the last 90 to 120 days?
Well, it's kind of rough because this time of the year we do get that cycle, right? But it's been a pretty traditional cycle. But what I'm hearing now, actually had a phone call today with one of the largest commercial sales reps in Texas, and a lot of the deals that were on hold. Let's talk about big land deals, big development deals that were on hold are now moving. He talked about at least 5 of them that were on hold across the state of Texas are now moving. So that for us at a title company, that's a big, huge sign. When you talk about if the market's picking up, that means the people with the money, the builders, the developers, they believe that the market is going to pick up and want to get some more, product on the ground. That's huge. But really, we're hanging tough. We haven't seen a big market shift since the immediate shift back and, summertime. Since then, it's been gradual, pick back up. And even more people, the real estate agents, the developers, the builders, the lenders are all feeling very positive. Everyone I talk to is moving and shaking and have deals and clients, and all of a sudden can't meet or have lunch with me, right? They're too busy.
That's almost a good thing, right?
That is a great thing. When everyone is available to have coffees and lunches and wants you to come tour their property, then that's, usually a sign that things are slow for them. But right now it's just the opposite. It's, can we get stats? Can we get, deeds pulled, all across the state of Texas. So it's a very positive sign right now.
That's good. And it's worth noting that interest rates have gone down about 1.25 in the less than 30 days. And I do believe we're going to continue to see them go down. I don't know that we're going to get back to 3% again, but I do believe that they're going to be sub 6. And I believe that when that happens, all hell's going to break loose around the country because there's so much pent up demand. I posted an article today that was from the National Association of Realtors. And they said that the pent up demand, it's going to choke the inventory in this country. And the number one market for pent up demand is Austin, Round Rock, Georgetown, which happens to be my market. Number 2 is Dallas, Fort Worth. So, and Miami and Florida, of course, is on that list in the top 10. So it's, look out when this thing busts open. And I think
people are tired of waiting.
Yeah.
They've waited for a year and a half.
3 to 4 month window.
Right.
Ladies and gentlemen, you're going to have to be able to go out and make these acquisitions before you're back into multiple offers because we're going to have an inventory shortage. It's coming. Robert, San Luis Obispo, you are in God's country. Now, I didn't say God's state. I said God's country. But you are in God's country out there. I'm super excited. I'm going to have dinner with Robert, y'all. I'm going out to San Luis Obispo on Friday to celebrate Sharon Lecter's 70th birthday. And we're actually going to eat dinner at the restaurant that Robert's family owns on the Pacific Beach. I can't even believe it. So it's going to be exciting. So tell us about your market. You are such a unicorn, though. Robert's on my team. He's a beast. He is the top producing agent out there. I mean, he's just making the competition cry. I love it because he's on my team.
Well, our market is very unique because we're in a very special place because we're sandwiched right in between San Francisco at the north and Los Angeles on the south. And then we're on the coastline. And we're very unique, and a unicorn is a very good way to explain it because we're a conservative area in California, lower population, gorgeous countrysides, low crime, low pollution. So it really is the perfect storm for us. The weather is gorgeous pretty much all year around. So what we're seeing in our area from an investment standpoint is there's a massive opportunity. And as we continue to see the change in economics nationally, we get the direct benefit from it because California is a very high tax state. You pay federal tax, you're paying high state tax. And what we're seeing is specifically investors are desperate to get into locations that they see are what we would consider more recession proof. And this area tends to be one because, one, it's gorgeous. And the byproduct of that is people here don't want to leave. Historically, people buy homes here and they don't go anywhere else because it's just such a great area to live. And number 2, the really massive push right now is the Paso Robles wine country. Paso Robles was named one of the number 1 wine countries in the entire United States.
Over
we beat
Napa?
out Sonoma, beat out Napa. And the national publicity that we're getting from that is huge. So we've already got a very tight market, low inventory, and now the group of buyers is exponentially increasing literally by the month. So that creates that storm of huge demand of people that visit progress,
right?
And then we get people that want to buy here, and there's no inventory. Investors are looking at this because the offset to that too is we're also in a massive rental crunch. There is not enough rental properties here. So from an investor standpoint, people who are holding money in cash in the stock market, they're seeing their value of that cash purchasing power decrease literally by the day. And what are they doing? They're transferring their cash from those paper assets into real assets, specifically cash flow producing real estate. And here, pretty much relatively speaking, any property that you buy in cash is going to be at least a 5%, if not a 6% cash on cash return, plus appreciation, plus tax.
Plus,
Yep.
Robert, it's plus appreciation, plus or minus depreciation when it comes to your tax
Correct.
rate. So that cash on cash return more than doubles because of depreciation.
Yeah. So the investors are eating it up, and we don't build here. It's a coastal community, so it's 2 years to build a house, 3 years if it's along the beach or around vineyards. So inventory-wise, we're always going to have the crunch, and people know that. So from a long-term standpoint, investment-wise, it's phenomenal. And people even coming from out of the area buying it for their own primary residence, they know that specifically, we'll say this year, we're projecting anywhere from an 18 to 22% appreciation rate on real estate in my area. And that's not even taking into account what will happen if interest rates go down farther in Q2, which they're projecting, which is going to be, the prices are going to skyrocket. So we're telling people, do not wait. If you're considering buying real estate, now is the time. Yesterday actually was really the best time. But for people who are looking, we're encouraging them to get into the real estate now. If the rates go down, phenomenal. It's a bonus. Refinance out. Get that lower payment, that's great. But if not, they know that they're going to be pulling that appreciation. So it's really exciting, and it presents a lot of opportunity, especially because I specifically do residential, commercial, and vineyard. So in-house, we can facilitate everything. I've been involved with all aspects over 20 years. So we really are seeing the benefit in all three sectors.
Yeah, you are. I'm here to testify because I look at these numbers every day. He is crushing it out there. But you know what? You're also outworking your competition. You know, most won't, I will. You know, you, Claudienne, and Angie all have that in common. You know, you're willing to do what others aren't willing to do. And so when you are, you have massive success. Guys, success happens because most won't. And if you're willing to do the work that most people won't do, easy.
Very true.
Lap up the competition. I love it. Angie, how many years have you been in real estate in North Texas and Central Texas? I mean, you have run big real estate offices. You've managed huge teams. You're a top producer, kind of an icon in real estate, really. And, you know, talk us through, because you've seen every market.
Yes. It's interesting that that's the question you led with, because I am also a history buff, and I believe 100% history repeats itself. So I love to look at the history and the cycles, and what has happened in the last couple of years is actually just been quite incredible, really. You know, cycles for the most part, if you go all the way back to the 80s, it kind of looks like a slide. You go, you know, you have this sort of graph. Let's start COVID to post-COVID. It's almost like a W. It's like our cycles just got compacted in this short amount of time. We're just moving at the speed of light. And that, what you said, now is the time to buy. I just got off the phone with a new buyer, and I said, I've never in my history, and I've been licensed since 98, have never had a buyer go, oh, I wish I would have waited. Never. And we're really there right now. So if you look at the cycle, where we're at currently, it's almost like a W. So it's like we were up, and then we just came down, and we stabilized. So we're here. But just in the last 30 days, I'm seeing prices, which they were falling. Fort Worth Metro, and my markets are very, very different. It's like Fort Worth Metro is very different from Dallas Metro, which is different from my primary South Lake Colleyville. Those are all very different markets.
How is Fort Worth and Dallas different?
So Fort Worth, let's just, for Fort Worth, you know, they have seen a 7% decrease over the past 12 months.
In price?
Yes.
Okay.
Dallas.
Just stabilizing it back, you know, pre-COVID.
Yes. But Dallas had a 1% increase where everybody was kind of, you know, lowering. However, what's interesting about that is if you compare this past 12 months to the previous 12 months, let's say for Fort Worth, the average list price is $343,000. Sale price $320,000. What is that? About a 7% less.
Yeah.
21-22. That same $343,000 house would sold for about $500 with no contingencies. That means you take it as is. You don't get to do your appraisal, and you probably don't even. You can do an inspection, but don't think you're going to ask for repairs. So that's like a 45% increase. Same thing for Dallas. Their list to sell is about a 7% difference now, lower. Before it was over about the same, about a 45%. To give you an example here in my market in Colleyville, I had they're down their list to I have it somewhere. Their list, let's just say average price 1.79, sale price 1.49. A year ago, that same house that listed for 1.5 would have sold for $2 million.
Wow.
And multiple offers, probably the same day it hit the market. So like you were talking about that pent up demand that we've had, they're there. Those buyers are there. And there's also a lot, not just the pent up buyers, there's a lot of new buyers that are entering the market. We have a whole segment of buyers who thought somebody was coming to save them. And I think they're kind of figuring out nobody's coming to save you. As a matter of fact, life's gotten a whole lot tougher. And so I really see those buyers have got.
The government's not going to pay your bills, people.
They've got the
whole what they tell you.
Yep. And so we've got a whole new segment of buyers that are tired of making their landlord rich.
Yeah.
They're coming too. So I see all of that coming. And you're right, with all those pent up buyers, we could easily get back to the over list price, no negotiating. I could really see that coming this spring. Honestly, probably starting in March.
Because I'm just so freaking busy right now. Like I cannot get off the phone.
Yeah.
And it's like people from 6 months ago calling me and emailing me. It's just happened in the last like 8 to 10 days.
Yeah, absolutely. Yeah. Well, and I told someone this the other day. I said, I think our spring is going to start January, February. And here, and you all are attesting to that's what we're starting to see. Insane. And, then I have a lot of people that say, well, why would I want to go ahead and list my house now? Well, in the Dallas-Fort Worth market, you haven't lost any equity. You've still got your equity that you gained in that run up. So take it now, get it, and go get into something if you want to make that move, whether you want to go up or down, and you can negotiate. Yeah. And maybe you can take some of that other equity and invest it.
There you go.
That too.
All right. Well, from the great state of Florida, Claudienne Hibbert-Smith, you're muted, Claudienne. Okay. And, Claudienne, you have a very large team in Florida, actually around the country, which, Angie's got a large team too. I did not mention that. Robert's building a team. But Claudienne, talk to us about Florida in general. I mean, Florida and Texas, this is where people want to live for just multitudes of reasons. But what is going on in Miami and around that area that you service?
What I find, Lisa, is that if we educate sellers, we're able to create more inventory. But if you are not willing to be honest, be transparent, bring them up to currency, they're still stuck in a year ago and you've got a problem. We've got agents that are going to quit because you got to go to work in this market. There's no put it on the MLS and you've got a line of 50. And I'm not exaggerating, a line of 50 at the open house one day from when you listed it. Yep. So we don't have that here, but I'm finding it that I'm literally showing properties on a daily basis to 2 to 3 people a day when we are priced right.
Yes.
When we are priced right. There is activity in the market. If everybody that's tuning in that's a real estate professional, just pull up the last 24 hours of new properties on the MLS. Then ask yourself, what part of this is my market share? Because it's not that people are not willing or wanting to sell. You've got to find the people. And how do you do that? Jeff, Jeff, he just secured 4 new listings this week and it's only Wednesday.
Yeah,
I need
Jim is on Claudienne's team, y'all, and he does how many listings a month? 18, 20?
about 15, 18.
He's a
And
machine.
he's pounding the phones. He's pounding the phones. He's saying to the seller, I know that you want to delay this 90 days. That's okay. He's got his letters already lined up, stamped, and ready to go in the mailbox every 4 weeks to follow up with in-between phone calls. And then you've got people who are social media monsters in a good way. And they're creating the inventory there. I've got a Sonia who door knocked. Yes, I said it. Door knocked on a foreclosure. Listen, foreclosure. The lady has some almost $400,000 in equity. Can you imagine? Somebody's about to lose their house. We are now helping them to get $400,000 in their pocket.
Wow. And Sonia came from corporate America.
Absolutely. Labatza. She was working for Labatza.
Yeah. Yeah, corporate America. And she is just, I mean, she's like a Robert, new on the real estate side, but Robert was in investment banking and all that, but has just come in and owned her market, like just is crushing it. I hope she's watching this. I'm so proud of her.
Yeah, Sonia was about to not even quit real estate, let her license lapse and expire. I said, no, we don't do that here. She came and worked with us. And I even told her, I said, stay where you are. She had 2 deals in 3 years. Of 300 agents, Lisa, you know what my rev share looks like. Mm-hmm. She's my top 3 in my rev share.
That's awesome. Well, because she has a great leader in you, Claudienne.
Oh, thank you. So I find that the market moves based on what we create out of it. And it's just very simple. I don't do high production anymore because I'm, focused on building my team and training. But I found myself, you know what? These agents are saying it can't be done. This is impossible. Let me go back into production. And just like that, 4 listings on the market, all at 7% listing, including one in Jupiter at $8 million. Guys, this is not like people, the sellers are afraid, buyers are afraid. Are you afraid? And you've got to communicate to the people what's going on. You have to be transparent. You have got to be transparent. Today's prices aren't tomorrow's prices. And
what are you seeing in the Miami market? What are your days on market? How many days of inventory do you have sitting around?
My inventory is going pretty quickly. I would say average 10 to 12 days.
Oh God.
But I'm priced right.
Right.
There is a difference.
Right.
There are properties that I've kept on the market for 90 days. It's not priced right.
Right. Same with me. I've had many over $1 million, and we knew going into it that we priced it too high. And then when we brought it to the price that, I thought
here's the problem though, Lisa, and this is what I try to tell sellers. You have to look at the comparables that I'm providing with you. I have a hard copy and I'm going to show you on the computer right now so that you don't see that I'm dictating what I'm pulling. You get to see it live for yourself.
Yeah.
But here's a hard copy, but I want to show you what's going on. But when you get ready to decrease the price is no longer where we're telling you to be right now because market conditions can change. Right. So let's just say that $1 million property that you decide to list at 1.3, now 30 days in the market, we have no phone calls. We've done open house, brokers open, mailers, ads. We've done the work. Nobody's showing it. Okay. Now I do brokers open so I can get some comments, so I can give it to my seller and say, hey, listen, it's just not me. Look at the feedback from all of these realtors.
Right.
But here's the thing, 30 to 60 days later, it's not $1 million anymore. Now we're at 950. So what I try to do, Lisa, and this has worked for me time and time again, Mr. and Ms. Seller, I understand you want to be at 1.2, but in 3 weeks, and we're not getting these targets, and I set the target for them. Okay, this many showings, this many people interested. If a person walks in the house and quickly walks out, that most times are not interested. So I set the target so that they understand, well, we did this, here's the outcome. We're going to build in a price reduction in this listing agreement today that if in 3 weeks we don't hit these targets, we're going to automatically do
Uh-oh. I think she just froze. Did you freeze, Claudienne? Are you back?
I'm here.
Oh, okay. Well, you froze for a second, but you said in about 3 weeks that you're going to do a price reduction.
So I build in the listing agreement the targets, and if we don't hit these targets in 3 weeks, I'm building in a price reduction in the current listing agreement, because sometimes it's hard to get the price reduction.
Right.
So I find that works for me, but our market is moving. You know, you got to think about it, guys. People die every day. People divorce every day. We've got 1,000 cases that hit the probate
All
court.
of these, right? It's like death, divorce, downsize. What's the other one? Demotion. They got demoted at work. There's all the D's, right, on why people have to sell a house.
Yeah, you just got to go find the people.
Yeah.
And always be ahead of the curve. Always be ahead of the curve. I remember when the interest rates were going up, I said, why don't we just talk about buy downs? Why don't we get the sellers to pay some of the closing costs for the buyers? They're going to be willing to do it because they've been sitting on the market for 90 days. Buy that rate down until we can do a refinance in 2 or 3 years.
Right. Yeah, there's just
nothing's prominent, but
you know, I think a lot of it, guys, is this 24-hour news cycle, right? Like, they have to come up with something to be able to blast into people's heads 24/7. Like, I get Fox News alerts and other news alerts every freaking 5 minutes. And I'm just like, oh, I've had to like turn it off because it's so overwhelming. I'll stop what I'm doing. Okay, here's what's happening here and here. No. I mean, it's too much, you know, and that's why, you know, if you're watching this, no matter where you are in the country, no matter what, you know, you've got to find someone who is number one. That's why I brought on these people, this group of experts, because you got to have someone who's an expert. You've got to have someone who knows the market. Yeah, they have to know the financial markets. They've got to know the stock market. They've got to know what's going on in the community, in the area, in the state, in the region, whatever. And, you know, and then you have to rely on a professional. Like if, you know, we're not going to, you know, do our own brain surgery. I'm not going to go try to do my own divorce or my own will. And I'm not going to, you know, I hire someone for every one of these tasks, a licensed professional, because I want to sleep a CPA. I don't want to do my own taxes. Hell, I'd be in jail probably. Right. So like, you know, we hire people but I always make sure I have the best people on my team. That's why I use Capital Title. They're the best. I mean, I have every title company in the world chasing me, just like every one of you guys do. I know Angie, you use Capital Title here in Texas. I want to be able to count on my partners. Yeah, I want to be able to count on my partners.
I want to say this, Lisa, really quickly.
Please.
The 5% Fannie Mae multifamily is a game changer.
Yes.
My clients are getting approved for way more than they would for single family. Now, you have to remember, when you buy single family, that's debt against you. But when you buy the 4-unit, they're counting 3 of those units as income for your purchase. So now you actually are making more money, essentially. And I'm just trying to simplify this for the viewers.
It's a game changer.
I did a seminar, 55, I did it free. 55 people showed up between in person and on Zoom. And I got 6 of the attendees thus far approved, and they are now house multi-unit shopping. Game changer. Not only that, I am going with VA too, because remember, VA no longer has loan limits. Now, if you're with a lender who has their own set of guidelines, okay, on top of Fannie Mae, Freddie Mac guidelines, they may tell you, oh no, there's a $3 million or $2 million cap.
Yeah.
Cap. No, that's not true. There is no cap on VA. In fact, one of my clients just bought a house, 1.5 million VA. 5.5 interest rate, no buy down. That's amazing. No MI.
Right.
We've got to tap into these spaces.
Yep, I agree. Yeah, it's, you know, certain investors. I was in the mortgage business for years, and you know they have layers. So you know it's their layered risk for their commitment with the agencies. But ABC Bank may have one commitment with Fannie and Freddie, and BCD Bank has a different one, and it has different layers for the underwriting. So yeah, you're right, Claudienne. So if you don't get the answer you like, go talk to someone else. 1,000,000%.
You hit the nail on the head.
Understanding the overlays, what they call it.
Yeah,
so
overlay.
Understanding that there are possible overlays is a big deal for an agent.
It is.
Because you'll go to one bank and they'll say, no, we can't do it. And then you don't even go to another bank because you're not educated. You don't know because maybe you don't have the experience. Maybe you're not asking the right questions. But I remember sending my buyer to one lender and I said, wait a minute. I remembered all the hoopla about VA not having loan limits. Was this a lie, fraud, what? I ended up calling VA. They said, no. I think that you might have gone to the wrong bank. Maybe they have overlays.
Yeah,
so they have their own criteria on top of VA's criteria. But you can buy at $5 million if you want.
Yeah. Good. Thank you, Claudia. Robert, do you want to pipe in here?
Yeah, I was going to say she hit the nail on the head. And the biggest thing that I think one of the common themes that we're all communicating is the number one thing that sets anybody apart is the knowledge and the level of knowledge and experience and education that you bring to your clients. And especially in my area, we're on fire from a demand and overall standpoint of people looking to buy the homes just as much, if not more, than it was a year ago. But the big difference is the actual individual and the mindset of the individual that we're working with right now. They're very, very savvy buyers. I currently have about 352 clients. The majority of them are investors or business owners. They're people that are in the economic space. And they look to the knowledge aspect. I know me personally, I'm an owner. I'm an investor. I have multifamily. I've underwritten about $400 million worth of commercial credit. So being able to use the economic standpoint, being able to use the knowledge of turn on money really helps, because then what we can do is we can sit down with the client and make them a plan. And as people are starting to see, and as the economy continues to change, the number one consistency is long-term sustainable wealth built through real estate. Real estate continues to be time and time again that number one asset that people always turn to when economic conditions change. And that's our goal for our client, is to sit down with them and help them understand, here's where you are, here's where you want to be, how do we make it happen? And like she's saying, what loan programs are out there? Knowing the loan programs in and out. Now, obviously, we don't have to be the massive best professional at knowing all the guidelines, but educating yourself enough to know that, like she was saying, if they're saying there's limits and there's not limits, that's potentially a client that you can be helping, that through utilizing your knowledge, you have just gotten a deal, you've helped the client get into a property that they might not have been able to get into just out of lack of knowledge. And that's where we need to really fall into nowadays, is continuing to take in and learn and utilize all these different educational sources to set ourselves apart, because it's becoming a complex industry, and knowledge is power. And the more knowledge that we have, the more useful we can be to help our clients and get their deal to the finish line. Because I don't know, for your guys' standpoint, every deal that I do there's no such thing as an easy deal. You know, they come through and there's always something complex or a nuance involved in the deal. On our side, whether it's wells, septics, lending qualifications, getting in there and being able to talk with the lenders and help them through the process, whatever it may be, lean on your strengths, find that knowledge aspect and use it, and the clients will benefit from it. And it makes a huge difference.
Cindy, tell us about title insurance. And, because, sometimes I get sellers and they just jump up and down about having to buy a title policy for the new owners. So will you kind of debunk that myth and why title insurance is important and how it really does protect both the seller and the buyer?
Well, yes. I mean, what we're saying, the residential real estate, commercial real estate, it's the largest wealth in the nation. I mean, there's like $48 trillion in home equity across the nation. Well,
and that's equity, y'all. That is not the value of the home.
That's equity. That's equity. That's your growth. And so you want to protect that, right? I mean, so of course you want to have insurance that you're purchasing, and you will be able to realize that financial growth because you actually get to own that property. title insurance is very unique to the United States. I think it's really built into the American dream, right? Home ownership and land ownership is very much an American concept, an American dream, of home ownership. And so title insurance ensures that you're getting to always realize that that dream and the money that comes with it. So it's really important. And I have people say, well, I'm buying a tract home, right? So there shouldn't be any issues with the title. Well, I can think of 3 scenarios just around the Austin area where that came back. And the people that did not have title insurance in a neighborhood, actually it was in Georgetown's the one I'm thinking of, Lisa. And, a lady bought it with 100 with cash, right? So when you buy with cash, you don't necessarily have to get title insurance. And it came back, a cousin of a cousin, that when they bought the land, sold the land to the developer, did not get their share. And all of us title companies came together to work out a deal for all the people that were insured under ours, but the people that weren't insured just lost out. They had to pay it themselves. So it's always very smart to get it. It keeps you from, if the homeowner had liens, IRS liens, construction liens, any type of lien, you want to make sure that you're covered with that. So when it comes back and you want to sell the property, it's just really important. It's the biggest investment that you make in your life. Why wouldn't you want to insure it?
Yeah, absolutely.
Yeah, it's really important. And to talk about the different mortgage companies, that's the same with title and insurance, right? Underwriters. You'll have one underwriter that's really hesitant to do multifamily because they might have gotten burned, on a deal in California or in Michigan, right? And so they're hesitant across the country. So it's important to have good title relationships. That's one thing about Capital, is we're independently owned and we actually own our own underwriter. So our underwriter, if it makes good business decision, we will underwrite it. And that's really different from a corporate standpoint, right? When you have these rules set out because they might have gotten burned by one condo deal, that they're not going to underwrite any of those. Having a partner that can underwrite it, if it makes good business sense, is really important to have that in your back pocket.
I agree. Angie, what would you throw into all of this? What are you sitting there thinking about?
I just think that the main thing that comes to mind is that you have a good team. You need to find a professional that also has a good support team, whether, with your title, your lender, your inspector, all of those can just make a huge difference. And when you work with a professional who holds themselves to those standards, then they typically have a team that's, at the level. So I think that's really important.
My team, like when I'm primarily a listing agent, and I tell my clients, I'm like, they're like, well, can we go use Susie over here and Bob the inspector? And I'm like, no, you hired me. I am the quarterback of, and after this week, I'll say the Dallas Cowboys. I may not say that next week, but this week we can say it. I'm the quarterback, and I'm not going to go use a different team. Like, I have my team. We are proven winners. We've closed $100 million in real estate transactions in 3 years, and we don't play, right? And so you're going to use this, and this, or you need to hire a different quarterback, because I'm not going to quarterback a bunch of people that I don't know and put my name on the line as your agent, your representative, with a bunch of people that I don't know, trust, or do business with. And I've never had a client push back after that. They're like, okay, you're right. We've hired you and your team. So when you're hiring an agent, you're not just hiring that agent. You're hiring them to quarterback their team, the proven winners, the people that they do business with every single day. Like I've been in the trenches on some deals with Capital Title, like nasty deals, nothing to do with me or Capital Title. Had to do with our sellers or the buyers, or it's come up on a title policy, and they've always worked out.
We had one where the title company, their security was breached. And so by nobody's fault, everybody was doing their job perfect, but we had these hackers. And so it literally shut down everything. And having the ability to The title company help us get it moved, not have to resubmit earnest money, redo the file. We actually had the lender who was able to look at it and go, okay, we don't have to go through underwriting and start over. Literally everybody made a seamless move for these buyers and sellers. But had we been with someone who might not have been as experienced or as knowledgeable on how to work and get it done, those buyers and sellers may still be waiting to close.
Yeah. So as we kind of wrap up, I'm going to go around and kind of get final closing remarks from everybody, starting with Cindy, and go around and just give us your real predictions for 2024 and your best advice. Like, give the advice that you would give your sister if she was buying a house in the next 90 to 120 days.
Do it.
Yeah, do it. There's that.
Do it. One thing that was said earlier was that real estate keeps moving. And so that's what we've seen at the title company. Real estate agents that are out there hustling and changing with the market, changing their, how they work for their clients, right? They've been succeeding, and we've been closing, and we've had a great year. So because we get the fruit of that, right? And so what I will say though, as it picks up, we're also going to have agents out there that maybe get back in it. They took a break because, they were during the boom. And so you're going to have to work.
Quitters.
Yeah. And so you're going to have to work a little harder, because you're going to have harder on the deal, because you're going to have new real estate agents, right? And so there's going to be some hand holding. But also I do think we're going to get back at that multiple offer situation, because what I have heard from multiple agents is that they have pent up demand by buyers. They might have 20 buyers waiting to get back into the market. And the moment when those interest rate hits in the 5%, they're back in it.
Yep.
Right. Because that's a low interest rate. We got really
can afford the payment
spoiled.
Again. Yeah.
Yes. We got really spoiled with the 2-3% interest rates. That's not real life.
No.
So I think now they've been educated enough to realize at 5%, that is beautiful. And so you're going to have a lot of pent up demand. So I think that the listing agents, the listing people are getting ready. I think we're going to have a lot of people hit the market, but not enough to meet the demand. Honestly, so I'm afraid that we're probably going to get back into that multi offer situation. Everyone has still good equity, in the properties, even when they bought at the high, we've had an appreciating market, at least in the Austin area. So I think it's going to be a really good time to be in real estate in 2024.
Yeah, before I push this over to Robert, just so everybody knows, there's more equity today in the United States in properties than there's ever been. So when people say to me, oh, are we heading towards 2008 again? I said, guys, 2008 happened because there was a mortgage crisis, because people were upside down in their houses. Yes. Mortgage fraud, blah, blah, blah. Today, there's more equity in homes than there's ever been in the history of the United States of America. They're not giving these houses back. And then even the people that don't know what they don't know, there's the Claudiennes and her team of the world that save them. So anyways, I just wanted to put that point in.
No, it's totally different than that time. I mean, we could drop $15 trillion in equity and still be at a 2020 level. I mean, tons of equity out there.
So good. Good time to be an American.
Yes.
Robert.
Actually, my closing is for two parts, basically one for the buyers and sellers and one for real estate agents. Really, for the buyers, the big one on me is three things. If you don't own a home, you need to own a home immediately. So number two is, if you own a home, you need to work on getting a rental property. And number three, if you own a rental property, you know how to do it, go do it again. And it's, it's the number one way. It's proven real estate is the key to beating inflation. Yep. Find individuals, professionals in your market that understand your market, that understand the economy, and have skills that can help you build out that plan and then execute on that plan. It's critical. And then for real estate professionals, agents out there, the biggest thing that I think we're going to have to do going forward is market differently and market more effectively. and on mass quantities. If you have skills to bring to the table, identify those skills, market those skills, clearly communicate to the public at large what it is that you bring to the table and why you're different, what you can do to help them achieve their goals. And not agent bashing. You don't need to do that. You need to focus on yourself, focus on your skills, and communicate to the world out there why you are different and how you can help them. Because the opportunity that's coming along in 2024, I mean, I can speak for myself on the investor side. We have real estate properties all over the United States. The opportunity is going to be tremendous. And I saw a comment there about interest rates, even interest rates dropping a little bit makes a big difference, because a lot of it is the sentiment and the feel and the push that you get. And people see that, and it creates excitement. And it helps. There's so many people right now that are just on the edge of qualification, and even a 0.5% interest rate decrease can make a big difference. Yep. And even that, with an additional buy down opportunity, that could push rates down into the 4s, which is a big game changer. The takeaway is real estate, real estate, real estate. It's the investment. It's where that long-term sustainable wealth is built. And I encourage anybody who's not in the space to look into it. And people that are on the fence, make the change, make the move, get involved, because your future self will absolutely thank you.
Claudienne is cracking me up right now. She's so funny. Angie.
I actually, I really don't have that much to say after Robert, because he's exactly right. And I think if the past few months has shown us anything as far as stock market wise or IRAs, I think people really should start looking at real estate as investment. It's proven to be, the sustainable, help, grow your money, help you build wealth. There's so many opportunities now, and especially being able to get in, like we were talking earlier about the 5% investor loan. It's just a game changer. And I think what stops a lot of people is fear, and they're fearful because they're not knowledgeable. So find a professional who understands. You're looking at 5 of them right here. We can help you make that transition. We can help you become an investor, building a legacy and wealth for not just you, but for generations to come, honestly. And for agents, I know that the market can seem really scary. It's really tough, especially if you came into the market in the last couple of years. It's tough, especially for new agents. And that what really wasn't reality. So like Claudienne said, you got to get to work now. Yeah. So if you're not getting the support and you're not getting the right mentoring and the right coaching, you need to get with a professional. Make sure you're with a team that has the ability to support you and help you grow, because we're out there, we're here for you. Buyers, sellers, agents, who you're with matters.
We're just a little one-stop shop. Claudienne, what I didn't mention about you, I talked about Angie's, 25 years. You've been in it for 25 years also, right?
23, yeah.
23. Oh. You don't look like you're a day over 23, but kind of like little Legacy, who I'm obsessed with. God, you guys have got to see Claudienne's little daughter. Oh my God. If she ever disappears, you're going to know where to find her.
Okay.
But so you've also got that huge experience. So, and Claudienne, you're just the perfect person to close us out. We get texts from Claudienne almost every day, me and Elena Cardone, and it's Claudienne, and she's pumping us up. We're like, this is supposed to go the other way. But she's like, hey girls, what are we going to do today? What's up? Come on, let's come. She's trying to tell me and Elena Cardone to step it up a notch.
The truth is, Lisa, is that we all have to stay inspired. And so you think I do it for you. I'm really doing it for me, because I want to be held accountable. I want to be able to tell people that I trust and care about what my targets and goals are, yeah, and say them out loud. I don't believe in the theory of keeping it to yourself, because when you fail, it's just like it didn't really exist anyway. And so I want to hold myself accountable. And I want to give you my key points for buyers: marry the house, date the rate. Marry the house, date the rate. I've been doing this for 23 years as an investor and a real estate professional since the age of 21. I wish I would have bought hundreds of more properties earlier on. I have not seen the prices that I paid 20 years ago, nowhere here today. And so even in the market crash, they didn't go back to those prices. And so buy today, because the dollar strengthens, it weakens, and we never see that dollar again. Don't worry about the lack or limitation of what you have. Worry about go making some more money. Like I'm not saying, oh my God, everything is through the roof. I'm like, well, I got to go make some more money to make this life make sense to me right now, today. So I want to leave you with that. I also want to leave you with, dang, what did I want to say? For the buyers. What did I just say? Marry the house, date the rate.
Yeah. So now what are you going to tell the sellers?
Oh, so listen, sellers, get with a real estate professional that knows what they're doing. 20 years does not mean somebody knows what they're doing.
Right.
I would take an agent 2 years in that has 30 transactions, 40 transactions. You've got to interview your realtor.
Yep.
Like, I'm providing my clients with resumes, with letters from clients. And I wanted to say one thing too. Offer what other people aren't willing to offer. And I see title is here. Just today, I sent my title company, hey, my client's looking to buy this commercial building. It's 1.5 million. Here's what they're putting down. Here's the taxes. Here's the insurance. Can you do a preliminary HUD? You know, I still call it HUD, Lisa. But the disclosure to Alta. So now my clients are happy. They're like, wow, we've never seen this before. Now we have a clear understanding, more or less, where we're going to be at when it's time to go to closing, because no one really shows them those. They don't show those numbers anymore, even though they're supposed to. They don't. So I wanted to mention that. And then what was the last question, Lisa? Did I hit everything yet or no?
No, you did buyers and sellers, but then you have to close us out with a Claudienne motivational speech that I get from you every day.
Listen. I want to say something to the agents out there. If you're not getting what you're, let me tell you, if you did 5 million last year, 5 million the year before, 3 million the year before, that means you need change. You're looking at an agent that spent 20 years, 2 decades with one company. The company was remarkable, but sometimes it's time for you to scale. Sometimes it's time for you to get new energy. Sometimes you need to make new relationships. So I just say this, in 30 minutes, an opportunity was provided to me to partner with my good friend Lisa Copeland and Elena Cardone. And I said, I cannot give up the opportunity. In 30 minutes, I made a decision. That decision has changed my next life. So I'll say this, focus on what your targets are, figure out what your goals are, figure out, does your current company have the tools and the things that you need to get to your targets? If the answer is no, then let it go. Come with people or come with a company. And you know, I may not be it. Lisa, we may not be it, but I'll tell you this. We have some remarkable tools, some stock options. You can get up to 100% real estate commissions. I've never had 100% real estate commissions, Lisa.
Yeah.
So listen, we have some things, and I'll tell you this. I just changed my health care, and I'm pissed because I just had 2 new babies. See, I got a 29-year-old, guys. I spent 27 years with one child. I got a 1 and a 3-year-old now. And I'm pissed because when I saw the hospital bill, I realized the insurance company paid a portion, but I still got to pay a portion of that bill too. Let me tell you why I'm pissed, because I see the benefits with my new EXP healthcare, and I'm like, wait a minute, I could have these babies and not pay nothing.
I think I'll have 3 more.
How about that, yeah, Lisa? But the point is, my co-pays have gone down, my deductibles have gone down to less than 50% of what I was paying with Florida Blue. I don't have a rinky-dink insurance company. I got to keep all of my doctors, my gynecologist, everybody. So I'm just telling you that it's better over here. That's what I'm saying.
Thank
And so
you.
I just want everybody to just set their targets, go for them, turn the news off. I don't know what the NRA and I don't even know, like, I don't even want to care about the lawsuit.
Yeah.
My last 4 listings, leases in the last 30 days were all listed at 7%. I'm
Yeah.
not playing around.
Right. Well, you're
I'm
also
not playing
providing that. And then, okay. So yeah. So guys, I think that's our number one thing. Turn off the news. 2024 is going to be what you make of it. Whether you're out there, you're watching this, you're a buyer, you're a seller, you're in the industry, you're a colleague of ours. It'll be what you make of it. 2024 is starting 10x bigger for me than 2023 ever did, and I had a good 2023. Like I didn't feel a downturn in 2023. It's what you make of it. It's, are you willing to do the work? Are you willing to have the attitude? And are you willing to make stuff happen? So that's my biggest advice. And the number one way to get rich, which was the name of this, in 2024, is to invest in real estate. So I want to thank all of my guests today. Put it in the comments. And if you catch this on the replay, please leave comments, because we will be checking in with you guys and gals. You guys, thank you very much. Robert, I will see you on Friday night in San Luis Obispo, California. I cannot wait. Angie,
We'll be ready.
Your big event that you're doing in Dallas, the big hunting convention. Yep. And Claudienne, you can see back there, see that picture back there behind her? Oh, Claudienne and her husband are just building a school. That's all. They're just building a private school. They're nobody. So anyways, these are all game changers. Cindy, thank you. Continue to be great. I love you guys. Bye.
At the top.
See you guys later.
The bottom is too